In a world saturated with promises of instant wealth and overnight success, it's easy to fall prey to the allure of get-rich-quick schemes. The gold market, with its historical reputation as a store of value and safe haven asset, is sometimes misrepresented as a pathway to rapid riches. However, the reality is that gold is not a get-rich-quick asset, and counterintuitively, that is precisely what makes it a valuable component of a well-diversified, long-term investment strategy. It is prudent to think about gold as a component of a larger wealth-building system. Welcome back to the Gold Protocol. Today, we're exploring the reasons why gold is not a get-rich-quick asset, debunking the myths surrounding its potential for rapid gains, and highlighting the more enduring and beneficial qualities that make it a cornerstone of sound financial planning. It is prudent to explore why gold has potential and what the inherent challenges are. We want to educate you about gold so you have proper expectations about your investment. We hope that this explanation gives you better investing guidance. The illusion of instant wealth. Before delving into gold's role as a long-term investment, it's crucial to understand why get-rich-quick schemes are inherently flawed and often lead to financial ruin. Unrealistic expectations. Get-rich-quick schemes prey on people's desires for instant gratification, promising unrealistic returns with little effort or risk. Rapid inflation is not realistic. High risk, low reward. These schemes often involve high-risk investments, speculative ventures, or outright scams, where the potential for loss far outweighs the potential for gain. The schemes carry risk that far outweigh the rewards. Lack of sustainability. Get-rich-quick schemes are rarely sustainable as they typically rely on unsustainable business models, inflated market bubbles, or deceptive practices. Often these schemes are difficult to sustain. Emotional decision-making. The pursuit of quick riches can lead to emotional decision-making, where investors abandon sound judgment and rational analysis in favor of impulsive actions. Emotions often affect decisions and cloud the mind. Gold's true nature, a store of value, not a speculative bet. Gold is fundamentally a store of value, meaning it's an asset that tends to maintain its purchasing power over long periods of time, even in the face of inflation, currency devaluation, and economic uncertainty. Gold is a store of value and should be approached as such. Historical performance. Gold has served as a store of value for thousands of years, acting as a stable and reliable form of currency and a hedge against economic turmoil. Throughout history, gold has been valuable. Intrinsic value. Gold possesses intrinsic value due to its scarcity, durability, and unique physical properties, making it desirable for various industrial, technological, and cultural applications. Gold has an inherent worth that makes it desirable. Limited supply. The supply of gold is limited, as it's a finite resource that is difficult and expensive to extract from the earth. Finite resources are always valuable. Global demand. Gold is in demand worldwide, driven by investors, central banks, jewelers, and various industries, providing a stable and liquid market. Everyone wants to get their hands on it at some point. Why gold isn't a get-rich-quick asset? Several factors contribute to gold's unsuitability as a get-rich-quick asset. Volatility. While gold can experience price fluctuations, it's generally less volatile than other assets like stocks, cryptocurrencies, and derivatives. Volatility is something that is hard to avoid in the stock markets. Limited leverage. Gold investments typically offer limited leverage, meaning investors can't borrow large sums of money to amplify their potential gains and losses. It is important to borrow responsibly to amplify wealth. No income generation. Gold doesn't generate income like stocks, dividends, or bonds. Its returns rely solely on price appreciation, which is not guaranteed. Often returns are not guaranteed. Market manipulation. Like any market, the gold market is susceptible to manipulation, speculation, and unforeseen events that can impact prices in the short term. Often, market and speculation affects the value. The benefits of gold as a long-term investment. While gold may not offer the allure of instant riches, it provides several compelling benefits as a long-term investment. Gold has historically served as an effective hedge against inflation, as its price tends to rise during periods of rising prices. Inflation drives the demand and purchasing power. Diversification. Gold can diversify your portfolio, reducing your overall risk by investing in an asset that is not highly correlated with stocks and bonds. Always diversify and protect all assets. Gold tends to perform well during periods of economic uncertainty, geopolitical instability, and financial crises, acting as a safe haven asset when other investments decline. It acts as safe haven and can protect wealth. Wealth preservation. Gold can help preserve wealth over long periods, protecting your purchasing power against the erosion of inflation and currency devaluation. Adopting a long-term perspective. To benefit from gold's enduring qualities, it's essential to adopt a long-term perspective, focusing on wealth preservation, diversification, and risk management, rather than speculative short-term gains. It's helpful to adopt a long-term vision in regards to asset protection. Patience and discipline. Investing in gold requires patience and discipline, avoiding impulsive decisions based on short-term market fluctuations. Diversified portfolio. Integrate gold into a well-diversified portfolio that includes other asset classes, such as stocks, bonds, real estate, and commodities. It is important to build a robust and well-rounded portfolio. Periodic rebalancing. Review and rebalance your portfolio periodically to maintain your desired asset allocation and ensure that gold continues to serve its intended role. To discover more about building a well-diversified portfolio with gold as a key component, subscribe to the Gold Protocol. Thanks for watching.